Let's do a silver price update and talk about how there is no saving the NASDAQ as well. If you're watching this on the replay, use the time codes below to go to your favorite part. But if you are watching live, yep, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main, going out live on YouTube and on X, coming to you live from Melbourne in Australia. A quick shout out to a few people and then we'll get straight to it. So use the time codes, people. But first, let's do the synchronized slurp. It's the favorite part of your day. You grab a tasty beverage. I've got my tasty beverage, a mug with my face on it. Could that be any more self-absorbed? Probably not. And what we do is we slurp our beverages synchronously together. Wherever you are in the world right now, grab your tasty beverage, hot, cold, whatever, and you must do it audibly. That is the rule, because it is the slurp heard around the world. Ready? 3, 2, 1, go. Good to see so many people here. Let's do a couple of quick shout outs. The early birds catch the shout outs and the worm. Well, then we'll go straight back to silver. Mark, Florida. Good to see you, friend. It's been a while. Too much happening, but wanted to say hello to us all as I pass through. Great. Way too many cousins here. And so, I'm not going there. In South Florida, needing bail. Needing bail money. Mark Cousins. Why am I? That's not how Floridians talk. They're thereby busy. Great to see you developing all your financial options. Thanks, Mark. Appreciate it. Neil's Han Dynasty is here. Like and share. Yes, please. G'day says Wayne Evans. Wayne Evans. Capital letters help. G'day, Mark. Good to see you. Yes, that's right. Great to see Mark. G'day, Stackers. Good. Yep, Jason. But really getting rather old. We're all getting old, aren't we? Ugh, my God. But, it's better than the alternative, as my grandfather used to say. Hello, Ashley Evans. Do we have relatives in here? Dark Knight Cowboy as well. Good morning, guys. Daz Stone, fantastic. Let's get straight into the stuff of the day. Of course, did you know that I'll be doing chart requests today as well? Super chats, if you want to support the show, send me a super chat. That would be much more preferable. I'm going to move this right there so you can see it a little bit better. Also, the show is brought to you by Perth Bullion Exchange, perthbullion.com.au as I flex my muscles, Mastering the Markets, masteringthemarkets.com, and Stormrake, stormrake.com. Yeah, go check them out. Let's do some stuff and things. Here is silver on the, what are we looking at? The daily time frame price in USD. We're talking 69, dude. $69. Oh, by the way, first, sorry, I will go back here. I'll have to come back to it. Can you do me a favor, please? Sorry. Head over to x.com/it's Joe Main. I just need to do this here. I normally do it. Thank you. We will change that time code so it's a little bit better. That's much better. Now we'll get back to it. Thanks, and you. Let me go back. Here is silver on the daily time frame, priced in USD, $69.25 US cents. Okay, so what happened overnight? Basically, good old Trump basically said, productive talks. I'm going to put a 5-day pause on further attacks on Iran, facilities and all that kind of stuff. So what we saw was a quick move in silver. Silver liked that. The NASDAQ also liked that. So it's interesting how risk on assets like that, but also risk off assets like gold and silver. And I'll take a look at gold as well, what that did. Let me take a quick look. Yeah, gold liked it as well. So isn't it interesting that both risk on and traditionally risk off assets liked that the same thing? Obviously, we saw oil have a bit of a drop. But here's the thing. Stuff like that, which is like a quick bit of news, doesn't necessarily mean it's, all back to good and peaceful and all that kind of stuff. So it was just a little bit of a news reaction. Of course, you saw crypto, head up a bit too. But interestingly, on that news, isn't it funny how it still follows basic technical analysis, support and resistance zones? Not all the fancy stuff like Elliott wave and all that, but just simple support, resistance, right? Let's take a look. What did it do? Well, and I promise you I didn't do this. And, you can't read my mind and maybe I'm lying. I'm not. I haven't moved this zone here. I've just, hidden it and unhidden it. That's all. So this has been here, right? This is support zone. And what I said was that we needed to, once we broke down through here, we were going to see lower prices. Well, we saw lower prices. Where did we see it smack bang on? Now, I've been talking about, yesterday I was talking about the $57 to $58 mark, and that was based on, I'll just show you quickly. That was based on this here. Let me find it. Is it this one? Or was it this one? I'm going to think it was that one. Was it that one? Yep, there we go, right there. Based on this one here. So from this old school low and this old school high, I've been liking this 57 to 58 area right there because it's the top end of the support range, the zag zone, call it what you want. So there was a lot of confluence between there and the linear version as well, which is at the bottom end. I watched the video from yesterday, and that'll show you what I'm talking about. We also had, which I didn't mention, let me go back to here and to the 4-hour time frame on the linear scale. We also had some trend-based Fibonacci, which I think I'd shown you guys. Yeah, I had shown you in a previous video where you take it from this high and this low, and then so this high, this low, and then it extends out to here, right about, where are we? Right there. And then you have this 0.618 Fibonacci level. So it looks like that was touched pretty perfectly at that $60.70 kind of area. But what I have been saying, and it was a long way of saying the short thing, which was not until you get back above here can we say, okay, the bottom is in, and maybe we just, the bottom's in, maybe we just snake around for a long, long time. Okay, but maybe, there's no more bargains to be had in terms of lower prices. Cool. You at least got to do something like this. You've got to follow this squiggle right here. You've got to start making like that. That would be a lower high. You need to make a higher low. Then you may need to break through and make a higher high. That's a bullish change of market structure because you've got lower high, lower high, lower low, lower high, higher low, higher high. Great. So you've gone from mini bearish back to sort of mini bullish. Cool. But not until you do that. And then on the 1 hour, where did we find exact resistance? And I'll get rid of that and that one. Yeah, that one and that one. Found exact resistance at that level right there. I swear to God, I don't move this stuff, right? Perfect. Cool. So at the moment, we're still bearish for the moment. We are not in bullish change of market structure yet. There are signs. There are some okay signs there. The fact that we may have played out a full kind of ABC or an XYZ pattern, if you show you here. And I know it's all spitballing and if this then that, all that. But this could be the little sideways correction XYZ pattern. An XYZ pattern in Elliott wave is three wave moves. Cool. I'll show you what I mean. Actually, it's better to show you on the daily. So this could be. It's a sideways correction because 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, what we need to see is this in order to say, okay, that's looking pretty bottomy at that 61-ish kind of level. Until we do that, no, because what you could do is the opposite. You could go like this, act as resistance, and then you could start making lower lows and that get into that kind of 57, 58 kind of area. Cool. So holding pattern for the moment. And what we do know, though, is that we will be going higher for longer over time. But yeah, that's pretty much it for the moment. Got to clear that 71 kind of dollar mark and do that. And then I'll be fine for higher prices. Until then, no. So that is silver. Gold. Yeah, okay. Gold had a much deeper kind of spike there. Let's see if that coincides with anything, shall we? Let's do some Fibonacci. And I'm taking chart requests, of course. We'll take a look at oil, I guess, too. You tell me what you want me to look at, and I'll take a look at it for you today. I also will be taking a look at the NASDAQ because that thing ain't no saving. All right, and there. Did we find any confluence? Let's have a look. Not there. What about on there? No, nothing. So we had this move down to that roughly $4,000 area. You can very easily expect in the next at least couple of days, probably into, we're only on Tuesday, so you can expect at least one green or 2-3 green days coming up for gold, because look at that big spike on the daily. That's pretty obvious. Number go up, number go down, number go up. You don't have that and then just continue going down. So yeah, nice spike there. You'll probably get something like this, maybe up into this sort of 4-6 kind of area. That's kind of the major area I'd want to see it get through. All right, let me get rid of that. Yeah, and that's the 0.6182. So right through there is going to be a massive resistance level if we get to here. So watch out for about 4,600, 4,650. And then if you break back down below there, well, that's still not good. Cool. So you'd want to see something like this, like that. Similar with silver, but a little bit sort of larger ranges. That's what you want to see in order to say, oh, gold heading onwards and upwards from here. Platinum for shits and giggles. Similar thing. It's all doing a very similar pattern. Here, you could even say, yeah, just need to see that do that. Similar thing. That's all. Get through there. So you're talking around about your 2,000-ish kind of level. So do that, and then we'll talk higher prices for platinum as well. I want to show you, though, the silver miners in particular. They could be finding a really nice little bounce here. Okay, so let's take, this is SIL, and that double top has played out. This is on the daily time frame. This is the Global X Silver Miners SIL ETF. Okay, it tracks the larger cap silver miners. If you want to be in silver miners but you don't want to buy individuals, then you let me do that. Then you just buy an ETF like this. It has, get rid of a couple of things here on the logarithmic scale. It's hit the 1.618 pretty perfectly there. If you pop onto the 4-hour, there's a bit of bullish divergence going on here as well. If you can see, sorry, it's a bunch of, there we go, a bunch of crap going on here. Just give me a moment. Get rid of all of that. Once again, I will take your chart requests, etc., and we'll have a good old chat about other things. Let me see. I'll get rid of you. Yeah, I'll keep you. You can see some bullish divergence on the 4-hour time frame, although nothing's confirmed yet because we don't have a change of market structure. That's why I have an alert in right there. Change of market structure, once again, is where you come up, you make a higher low, then you get through, you start making a higher high. So my alert is right there. Once you break through there at $84.35, call it, that will probably form a bullish change of market structure on the 4-hour time frame. Okay, but I like the fact that it has come down now to a key trend zone right here at that 1.618. I like that. It's back at previous support as well. So breakout, retest there. Let me get rid of all this crap here. I'm going to go like this. Once again, if you're watching for the first time, you're watching Good Morning Stackers. I talk about investing in all kinds of things. I've been a silver stacker since 2010. I've worked for 3 major gold and silver bullion dealers here in Australia. And I've probably served many of you either on the phone, via email, or I've probably packed your orders back in the day for some of the major dealers. But my point was here, let's take a look from this low here and this high. Where are we sitting? Gee, what do you know? So this could be a really interesting spot here to look at for silver miners. We'll take a look at what it's doing against the silver spot as well. But yeah, you're in the zag zone. You've bounced off it. You've got, so previous area of resistance, right? That's the buyers seem to be stepping in here at the moment. That's a decent dip. Let me go back here. Could you be, though, retracing a larger move? Let's have a look. Yeah, not necessarily just yet, because you can see the bearish divergence between that high and there. So that means, though, that you could possibly be retracing this kind of larger move here instead. So this may not stop here. Okay, so if you take a look at this larger move, because you've got that bearish divergence from the 3rd to the 5th and then that double top there, this could be completing a larger move down, quite possibly. But I just watch out here. It's an interesting area. Once again, if you do that on the daily time frame, or the weekly, let's show you the daily. If you do the following on the daily, just like we showed you on the 4-hour, if you do this, that, and then you get, again, that bullish change of market structure, then you go, okay, cool. Now we're making successive higher highs and higher lows. We're not doing that at the moment, okay? So back to the weekly. Watch out for this zone in here. Right in there is the big kicker. So I like that 63 area. If we break down through here, I like that 63. So watch out for that. Yeah, that is SIL. The SIL versus the silver spot, so miners versus the silver spot, is still just kind of ranging at the moment. We had that massive move and that breakup, which was looking really good for the silver miners, and then spot just went through the roof. Remember when it went? Remember that only a few months ago, only like 2 months ago, when we got up to like $120. So silver was really out. So the miners were doing really well, and then the silver started outpacing, and they just had that massive spike down. We haven't yet broken back into an area where I would say that silver miners are taking center stage again versus I did not have sexual relations with that woman, where it is taking center stage against silver spot. Cool. Needs to do the similar thing. Just like, that support zone we showed with the silver spot, it needs to do this. That, and that. Okay, and then you're going, oh, silver mine is very tasty versus silver spot. Cool. What else? There's a couple of other things. If you take a look at copper, it seems to be doing a similar thing as well. If I show you the COPX, let me fix that lighting. There we go. That's a bit better. COPX has had a bit of a move. Yeah, it's still got room to move down here. You could come down into here first. So yeah, watch out for that previous all-time high. If I show you on the weekly, yeah, it's probably still got room to move actually. Yeah, I wouldn't say that's completely done just yet for your copper miners. 4-hour, there's a bit of relief on the 4-hour, but again, it hasn't changed market structure. You've got what's potential. It's bullish divergence there. Similar thing, it's just got to do this. It's made a little higher high. That's great. That's got to turn into a higher low, and then that. Then you would call that a non-failure swing, and that would be good. Okay, at least on the 4-hour. But yeah, the similar thing, it's got to do that. Start doing that. So not just yet, but keep an eye out. You could be coming down to potential good buy prices for silver miners and for copper miners as well. Let's take a quick look at oil. And I want to take a quick look at, I've got to take a look at the NASDAQ as well. Oil's had a bit of a dip. Yeah, that's just on that news. XLE, which is it really held up really well. XLE is the United States, the USA energy market sort of whole, if that makes sense. So it tracks the United States energy market. And on that news, okay, we had that move down on the news of the 5-day pause, right? But it's really headed straight back up pretty much. So it's kind of at the levels where it was before it had that dip. It's not far off. So XLE, the energy market in the United States at least, is actually holding up really well. So look at that spike. That's a pretty big move down and a pretty big move back up again. So it might be that this is just a little flash in the pan, this 5-day, Iran attack pause news. Cool. What else do I want to look at? I'll look at XLE versus XLB. So that would be the US energy market versus the US materials market, which would be silver miners, gold miners, etc. Yeah, look at that. Not much. Didn't do much. Pretty much bugger all, actually. If you take a look, a little spike down, and now we're back to close to where we were. So it looks like at this stage that the energy market will probably, yeah, look at that on the monthly. The energy market will continue to outperform the materials market, meaning silver miners, gold miners, etc. Does that mean you sell out of your gold miners and get into energy stocks? No, you just hold those. But, if you're looking at investing in anything extra, okay, maybe have a look at the energy market at the moment. It's not too bad. We did talk about something like BP the other day, which someone gave me a chart request for, and then I realized, holy crap, that's a really good looking chart. Let me get rid of that. So that's looking really good, pays a great dividend as well. So just consider the energy market for any new investments. We love that you dollar cost average into precious metals, cool. But, if you want to spread your wings a little bit, it does seem like the energy market is outperforming the materials market still for a bit until proven otherwise. Let's go to the NASDAQ. And after that, the market will open. We'll see what the market opens over on the Australian market. We're playing a little bit of a dip, I'd say, in some energy stocks. But I want to show you the NASDAQ right here. Cool. And then I'll get to your comments, and then I will take chart requests. Preferences go to the super chats. Help me out. Put me through school, people. Here is the NASDAQ. And there's no saving it, in my humble, non-financial advice opinion. There's no saving the NASDAQ over the longer term. Let's take a look on the shorter term as well. The NASDAQ is basically the top 100 tech-based stocks. Tech stocks are cooked, okay? We're looking pretty cooked, and there's no saving it. So not even, in my opinion, this little, Trump saying pause on the Iran attacks, 5-day, it had a little bit of movement, but not for long. Okay, yeah, you had this little gap up. So we were down here. We were making lower lows on the weekly time frame. Sorry, let me go back. So you've printed a lower low. So you've now changed. You've printed a lower low. You haven't technically changed market structure on the weekly time frame. What you would need to do is then lower low, lower high, and then do that. That would be the bearish change of market structure. Although, no, let me go back on that. That's bullshit, because we actually have, because we did it here. There, equal high, and now we've broken. So actually, no, sorry, we have broken technically market structure on the weekly time frame. That's bearish, okay? That is bearish. Now, what was my point? My point was that we come back here, and look at this. It's really not a huge move. Like, it went there, and then, look, it was a big kind of flash in the pan. You are still making successive now. Look, lower highs, lower high. Did it make a higher high? Nope, it made an exact equal high. Is that like exact? Look at that. 24,462.16. 24,465.16. Oh, okay. It was like a couple bucks more. It's basically an equal high. Okay. So the NASDAQ didn't price that news in as fantastically good. Okay. It was a little bit of a jump. Oh, wow. 5 pause, risk on, assets, great. But they still sold here. They didn't sell a lot higher. And that's not good for the psychology, okay, of the market, right? Psychology is still saying, okay, a little flash in the pan. All right, we'll do a little bit of day trading, but yeah, no, I'm going to day trade this. So a lot of traders would have gone, news. I'm going to make a quick little trade. I'm going to buy around about here if they got in, watch the algorithms, all that stuff. But where are they putting their sell orders? Sell orders came in here at an equal high. It says, well, I just want to make a quick buck, because I only think this is a little flash in the pan, but the general trend is still down, and they've proven that by only selling at this high here. It's not a higher high. Cool. So that's the psychology of it. So that's why the NASDAQ there's no saving it, in my opinion. That should have resulted in a much higher high, in my opinion. So it just says that this is just par for course. Look at this. You've broken there as well. What you would need to see on the NASDAQ, and it could turn around, but you need to see that. Similar thing. You've got to start making a higher low followed by a higher high, and then you're in some kind of bullish change of market structure. Great, but it's not until you're getting back above around about that $25,500 mark. Actually, it'll be less than that now, because we have a new low. Let me just see. If you're really bullish on the NASDAQ and you want to make a butt ton of money in tech stocks, you cannot be bullish on it at all until you cross through this zone here, right there. So the new line is actually, I have to move that down. You're sitting right here at $25,200 until you get through that zone right there. Isn't that interesting how that lines up too? Then you cannot be bullish on the NASDAQ at all. It's looking pretty damn bearish. I would suggest, let's play the what if game, okay? Even if you get up through here, let's say you do this. Yeah, cool, great. And then you get up through here. Cool. That's great. But it's still pretty darn cooked, because what we know where we are, we're in the excess phase of the NASDAQ. So let's look at it on the larger time frame, and we'll get rid of a couple of these things here. On the NASDAQ, you are in the excess phase right now. Excuse me, get rid of all that. This is the excess phase for the NASDAQ. Okay, that's on the logarithmic, and I'll pop that on the, nope. I will move that for a second. Ignore that for the moment. Accumulation, public participation, excess phase. Do we have bearish divergence from the top of the public participation phase to what I believe is the top of the excess phase where we are right now? Fucking every time. Why, yes, we do. Did I know that earlier? Yes, I did. But it's saying that the momentum is getting lost, okay? Third to the fifth, or top of the public to the top of the excess. All right, markets move in three main phases: accumulation, public participation, excess phase. Then you have a longer drawn out consolidation period, okay? This is where people buying tech stocks at this kind of time, I think, is a very bad idea, okay? Now, could I be wrong? Yeah, of course. Could this just be a little flash in the pan in the downward direction, and then we continue onwards and upwards? Yep, that's true. We could do that for a little bit longer, but I'm telling you now that the excess phase, this doesn't last forever. We're actually at key areas here, and let me show you on the Fibonacci trend-based fib. Where's my trend-based fib? Is that it? There we go, right there. So let me get rid of you and you. So on the, and I'll have to hide you. Oh, is that the one? Yeah, there we go. That's the linear one. So on the, where are we? On the linear scale for the NASDAQ, a five wave move, or the fifth wave move, which is the excess phase, it tends to like the 0.618, go away, the 0.618 or the one level from this low and this high and that low right there. What I'm trying to do is estimate where the fifth wave finds its top at. And based on previous history, on other markets, etc., it likes this area here at the 0.618 from this low and this high and this low, or the one area right there. Now, where are we right now? We're at the one. We're right there, really close to it. It looks pretty darn toppy to me. And when you take a look at the other cycles of the market, you take a look at what's been outperforming recently as well. And if I can find it for you, let me put it in. Give me a moment. Let me go to MTM stuff. MTM cycle. Course questions. Economic cycle. Let me show you the economic cycle. This is the general economic cycle of the general market. What tends to happen is the following, okay? When you're in a major market top, you know that a major market top is coming in when energy starts outperforming the general market, okay? What have we been seeing recently? Energy outperforming the major market. This is what's coming, okay? We had industrials, technology does really well in the bull market, okay, like this. Then you've got basic materials, you're talking about silver, okay, you're talking about precious metals, etc., did really, really well as this was still creeping up. Then energy comes in. That tends to signal a major market top. And then when it starts rolling over, that's when utilities, consumer staples, healthcare, etc., start doing well in the bear markets. Okay, and then when you have a major market bottom, that's when financials like bank stocks, consumer discretionary, luxury goods, and all that kind of stuff. They're doing really bad at the moment. Energy's doing really well. That's signaling a market top, okay? And that's coinciding perfectly with the excess phase, the top here. We've already done, accumulation, public, excess. We've got the bearish divergence, the momentum loss. We've come up to the one right here, traditionally a good area for a market top. Weekly change of market structure, bearish. Okay, the fact that this 5-day apparent good news did basically bugger all to the price of this. It didn't shoot it through the moon. Okay, kind of should have, and it didn't. So it's saying that the psychology is bad. Okay, for the NASDAQ. Cool. So there's absolutely, in my opinion, no saving it whatsoever. But my point was, you could even creep higher. Look, even if you did this, I'd still be watching out for this kind of fake out kind of thing up in here, right? Maybe one last little push up to that $26,000 mark, maybe because it just wants to hit it exactly. But yeah, no, you're no saving the NASDAQ, in my humble opinion. I think you roll over for a bit. Okay, that is it. And there's much better places to be as well. So you'd be like, even if the NASDAQ is, finding a bottom here, let's say it finds a bottom here, and then just sort of, I bought the bottom on the NASDAQ, guys. I bought it right there. Well, congratulations. Now is it just kind of faffing around for a while and just, doing kind of sideways action while other things that you could be in are way outperforming, like energy stocks, like precious metals, etc., etc. You've got to look at your ratios as well. So, for example, let's look at the silver to NASDAQ. Why be in the NASDAQ when it's in a bear market? And also, there are things that are massively outperforming it. So, for example, here, there's your silver versus the NASDAQ. We had that massive move. We've been talking about that since before here. Remember that? Been talking about this last year, the fact that we were going sideways, looking like we were bottoming, and then we finally broke through. Then, okay, silver went crazy. Where did it find, and again, isn't this interesting? Where did it find exact resistance at? It's almost like, I know it's strange, isn't it? It's almost like technical analysis and stuff kind of works, isn't it? Just previous, simple things like previous areas of resistance. Well, there. Oh, yeah, right. Found a nice little move right there. And now we're having a consolidation back to previous resistance is now becoming support. Okay. So you're looking good on silver versus NASDAQ. I think this will continue to massively outperform over time. Silver might be just, again, taking a bit of a pause here, that sort of wave 4 pullback that we've been talking about, but I think it will eventually massively continue to outperform the NASDAQ. You've got a lot of room to move with silver versus tech stocks. Okay, but there will be a point where I will be, once we get up to this general kind of area here, maybe even higher, I'll be swapping my silver for juicy tech stocks like Tesla, etc. They're great over the longer term, but they're just not the place to be. No saving the NASDAQ. Wow. I did 35 minutes straight or 30 minutes straight without doing any shout outs. Let's go back. Great. Cool. Let's do that. And lots of people watching as well. Hit the big red subscribe button to join me. Good morning, Joe. Morning, Stackers. Morning, Jason. It's good to see you. Look how beautiful. Look at that beautiful tiny green candle. Yeah, exactly. When did Trump make that announcement? 7 a.m. Monday morning, just before the markets opened, was spooked the markets were going to continue sliding. Yeah. What? I mean, that's what I would do if I were the Prime Minister of Australia and I had the ability to affect the markets in a way that wouldn't freak everyone out. Then yeah, I would do that. I would do that so that we don't have a massive panic. Bottom of the morning to you. Bitcoin and Woodside, please, Joe. Well, Woodside's just opened, so let's take a look at that. STO and BHP. Okay, cool. Hey, Joe, what caused the pullback over the last week? In silver, just normal market psychology. Just normal market moves. Have big move up, big move down. There's nothing specific fundamentally, if that's what you're saying. If that's what you're asking. Yeah, everyone's asking for BHP. Okay, sure. That special little Military operation. Please share your thoughts on why the NDQ, whether NASDAQ is doomed. I just did. Great. Good morning, stackers. G'day, knackers. Great. So, looks like people want... Let's look at BHP and Woodside and STO. And I go back to that. That was actually a nice little comment. Bottom of the morning to you. Let's go. Let's go to the market. Back to the market. And well, actually, you know, before I do, can I please and ask you? Can I ask please and thanks that you buy from Perth Bullion Exchange, perthbullion.com.au. They are one of my sponsors, and they are the best bullion dealer in all of Australia. And also, they have 20 or more. They have free shipping. Free shipping when you have 20 or more items in your order. Best prices, best range. They've got stuff in stock. Some stuff's on back order because, you know, we're all in this hyper demand kind of market at the moment. A little bit less now that the prices have come off, but everywhere is feeling the pinch in terms of getting supply of silver, but they're still doing it. They're doing it great. Perth Bullion Exchange, perthbullion.com.au. Go check out their range and particularly do a price comparison to all the other major silver bullion, major gold and silver bullion dealers, and you'll find, oh wow, their prices are really good. Okay, and they are, and they're not jacking up their prices like some other dealers that I may or may not have previously worked for as well. Yeah, that's that. And just speaking of silver for a second, would you like to see, let me go here, would you like to see an excellent webinar? Okay, this is from Mastering the Markets. This is Jamie Bell, who is one of the lead educators over at Mastering the Markets, masteringthemarkets.com. I am doing their year-long comprehensive course. I'm halfway through. I'm in term 3 at the moment, learning Elliott wave theory. But this is the webinar from last Tuesday, and now the replay is available. If you would like to see this, then send me an email and I'll send you the link. So this is Silver Was the Last Play. What comes next? What comes after silver? This is a great webinar, about an hour long, telling you we've had the big silver run. You know, you should still buy silver for the longer term, but what's the next sort of shorter to medium term play this year, maybe into 2027? He's one of the greats there over at Mastering the Markets. He's, again, one of the lead educators. So if you do one of the courses, he might be one of your educators and you'd be very lucky to get him. If anyone wants a copy of this, it is not specifically on their website. So what you would do, because it's like a special link, so you would send me an email. Send me an email to, if you want to see this, send me an email to joe.main@masteringthemarkets.com. joe.main@masteringthemarkets.com, up there, see there. Put in the subject line, silver webinar, something like that, and I will send you the link myself. Cool? Want to watch that? Highly worth it. Let's go back. Let's go back. I want to go here and here. I want to take a quick look at... Oh, okay. Let's take a look at the market. The market has opened. Let's take a look at what we've done. I'm looking for my orange ones. Cool. All right. All right. Okay. Let's start with BHP because we had a few people asking for that. Here is BHP on the quarterly time frame. Let's take a look at it on the monthly. I'll take it off the logarithmic for a moment. Beautiful. All right. So that's on the monthly. We'll take a look at it on the weekly time frame. Nice little jump today. Okay. Where have we found exact support? Remember we talked about it on the linear scale, and I'll get rid of that for now. Is that the one? That's the one. We found it in the zag zone. Fantastic. And we found it at that 46. Do you remember we talked about the 46? And I said, watch out for 46 at that zone right there. So yeah, we found a little bit of a move. So a bounce there. Nothing saying that we're moving onwards and upwards just yet. Nice little bounce, I guess. But you need to see a change of market structure. That's all. Yeah, so nice little bounce off there. This could be a nice little bottoming area. You should probably be dollar cost averaging into BHP. It will be an absolute behemoth and continue to be a behemoth in the years coming. And like, I'm talking out to like, 2045. Okay, we're talking like 20 years cycle here. You're going to be very, very happy just buying and holding BHP. But yeah, I've got to see this. That. Again, I just have to see a change of market structure, right? We're just bearish at the moment because that could go up to there and then continue down, okay? So If you want to take a little nibble here, sure. If you're happy to buy and hold for the longer term, you take a little nibble. You should have taken a little nibble around about here. If it heads down further, I'd be dollar cost averaging. I'd just be worried if we start getting through that $43 area, I think it was. Or was it 41 on the logarithmic? Yeah, down into that area there. Get concerned with BHP if you start falling and holding through. Yeah, sorry, it was 41.50 right there. That's when I'd be concerned. Other than that, number go up, number go down, you consolidate. As long as we start getting this kind of thing eventually, yeah, you're looking fantastic. Cool. Just can't say we're there just yet. So the dip may not be done dipping for BHP. Sorry, I just got to fix this lighting issue. No, it doesn't want to. Oh, all right. I'll just be completely washed out. All right, screw you. Let's try that again. There we go. Got it. Let's take a look at Woodside. Flash in the pan, mate. What did that do? Nothing. So here is Woodside. It's had a bit of a dip. Not much. Woodside is oil and gas. Okay, so the energy markets, you can see that's equal, a bit of bearish divergence, I guess, on the 4-hour time frame, where you can see that we made a. Why isn't that doing that? Come on, man. What are we doing? Fuck. Okay, why is this so slow today? What's going on with me? What? Okay, doesn't like me. All right, whatever, man. Yeah, okay, it's just not liking me at all. Okay, so higher high, equal slightly lower high on the relative strength index. It's ticking over a bit, but I wouldn't be stressed about it. Maybe after such a large move. Why am I moving so slow at the moment? What's going on? Oh, that's because of that, probably. Okay, now I know why. Good. I was running my own stream. I was watching my own stream. So you could be having a little bit of a dip here. Yeah, you could be dipping here potentially, only because you've had such a large move. There's nothing. Look at this on the weekly. There's no change of market structure. It's just doing really well on the weekly. I would only be concerned if we start doing. Yeah, I can see it there. Yeah, again, look at that. Look at that. Yeah, I could see a little bit of a sell-off coming. But I would be watching for this zone in here, and that's around about between $30 and about $27.50 roughly. So just watch into there. And if you've got a bearish change of market structure, then yeah, sure. So there's something like that, lower high, lower low, then you can say, okay, it looks like we're going to come down into this area. But until you do that, no, look, we're just making higher highs, higher lows, higher high, higher low. You could just keep going like that. You've got to watch out for the bearish change of market structure, where again you're making a lower high and then a lower low, and then you can say, okay, yeah, heading down a little bit further. But there's some little signs that you might be taking a bit of a pause here. Again, we've had a massive run in energy. Yeah, and interestingly, once again, isn't it interesting? Okay, that zone fits perfectly with previous resistance. What do you know? Previous resistance, breakout, maybe you get a little bit of bearishness and come back into this general area. Previous resistance becomes support. Yeah, not surprising at all. Back to 27. Wouldn't stress on that whatsoever. But yeah, nothing saying that's doing it yet. Cool. And STO, Santos Limited, probably in a similar kind of thing here. Yeah, you come up to previous resistance. That's it. STO is a little bit different. You haven't had it yet, and this is a good thing. You haven't yet had a major breakout of that zone that we need to get out of, right? So you're not out of it yet. So Woodside has had that move, okay? STO hasn't done it yet. Cool. So this is just still kind of consolidating through this area. If you break up through here, it's around about $8.30, $8.40. Watch it fly. And I would also be careful if we start breaking back down below here. I would be considering probably getting out around about here. If we close below that $6.60 mark, I'd probably say now I can move that down to there. I think is a little bit better. Around about there is at your $5.90 kind of area. Why did I have it at Why did I have it here at that $6.60? There's a reason why. I just don't remember the reason. I'll keep it there and to investigate the reason why I did it there. Don't remember. There's a reason. So that's STO. Other chart requests. Yep, did that one. BHP did it. DVP, please, Joe, asks Peter. What is DVP? Have we done this before? DVP. Got around about 10 minutes to go, people, before I have to go. DVP is Develop Global Limited. Sure. Oh, I've looked at this before. Preferably, I like to do ones that I haven't looked at before or semi-recently, but DVP is in non-energy minerals. It's a $1.37 billion market cap, and I'll go back to the chart so you can see it. That would be better. Engages in the exploration and production of mine, base, and precious metal resources. Okay, it owns Sulphur Springs project and a bunch of different, non-energy minerals. Why did I have all this drawn in previously? Let's have a quick look. I don't know why I've had that. Why did I have that there? I had this drawn in, a 13% move. Why did I do that? No idea. But anyway, the short answer is, let me get rid of all that. We can see we had a move and with bearish divergence. Cool. All right. So we had a higher high and then we had a lower high off bearish divergence as well. So you saw that. Now, if you had been watching this and you had seen that kind of thing happening there, and then we broke right there. On the daily time frame, this was your get out. This was your take profit target, your take profit area. We had a higher high, lower high in the relative strength index. Then we formed even there. So on the shorter term time frame, we had a higher high, lower high. Your get out, because you're now bearish, would have been right here. And after we broke through there at $4.75, we've just been a straight shot down. Pretty much. Okay, so I cannot tell you in any way, shape, or form at the moment that DVP is going to start heading onwards and upwards again. We might be having a little bit of a pause here, and yeah, good, finding a higher low potentially, great. But yeah, can't tell you just yet. Got to do that thing where you start making a bullish change of market structure, higher low, higher high. Okay, sure, but until then, no. And let's look for some potential lowishness. What are we talking about? That's on the weekly. I'll get rid of you. And this is on the linear scale, so we can go from, I can confidently say now, because that's bearish, then we'll take it from here. And we're in the zone. Yeah, you're in the zone. So watch out for anywhere in here. I need to see it get back, above previous resistance, which is there. So at about $4.35, then you'd be looking a little bit better. Anywhere down into about $3.40 might be an area to watch out for. But again, I just need to see that. Then okay, yeah, we could be moving onwards and upwards. That's DVP. More comments. If you can afford it, buy the dip, says Knackers O'Reilly. Yes. Peter says, has the course improved your trading? And have you been able to avoid this crash in the market? Yep. And how much time is required to keep up with studies? Fantastic questions. I will answer all of them for you right now. So I'm doing the year-long comprehensive course. There's also the 10-week course. I'd highly recommend at least doing the 10-week course. If you want to be like full on and do the intermediate and advanced techniques, do the year-long. But the 10-week I had to do the 10-week as part of the year-long. Dow Theory Principles, Technical Analysis Foundations. For what you get for what you pay for, a lifetime of knowledge. It's great. So has it improved my trading? Yes. Has it improved my longer-term investing? Yes. I've made all these public announcements before. Bought silver 2010. Didn't sell at the top because I got lost in the narrative, right? I didn't realize what phase of the market I was buying in. I was buying in the excess mania phase. I didn't even know what an excess mania phase was. I'm just this younger buck, had a spare bit of cash, started pouring all his spare cash into silver over around about a 6 to 9 month period. Didn't realize I was in the excess phase. I'm listening to everyone saying silver to the moon. We're breaking 1980. We're going to hit $50. Of course, we're going to break $50. That's the previous 1980 high. We're going to break $50. We're going to $100 an ounce, $500 an ounce. The split from the paper price and the COMEX, the manipulation, all that stuff is all the stuff you've been hearing now is the same stuff I was hearing back then. I got caught up in the narrative and I didn't look at the technicals, right? So I made that mistake. Then I've been a crypto millionaire twice and I've lost it twice. I've told that story before. And now my trading is great. And I'll give you an example. Individual results vary. What I've realized though, and you'll learn this as you start learning this stuff, is you'll learn what type of trader you are. And are you better at shorter term trading? Are you better at longer term investing? Which one is sort of giving you better results? At the moment, I'm still learning this stuff. So shorter term trading, I'm better at, much, much better at. So my portfolio right now is up. Since I started mastering the markets, my portfolio is up around about 30% of my shorter term sort of swing trading. It was up as high as 50%, but then, markets go up, markets go down. But yes, you are correct. Have you been able to avoid this crash in the market? Yep. I got out of silver miners, etc., at around about $106, $107 when we saw the bearish change of market structure. Had the $120 mark. We were talking about this in the show. I was like, if it changes here, I'm out. And then it changed. I got out. So I rotated into other things. I rotated into energy stocks, Woodside, Santos, those kind of things, because that's where the rotation was looking like it was going. I rotated into those. So where a lot of stuff has been going down recently, I've either been going up or I've just been sort of maintaining. Now, in this last little move last night, I had a bit of a dip, but not much, but that's just because that was a little flash in the pan, I think. But to give an example, my longer term trading, my superannuation portfolio is up about 45 or 50% still now, because that was just, I'm not trading in and out of it. It was like, buy some energy stocks, buy this, buy that. I have traded a little bit, okay, but it's much more of a slower thing. It seems to be for me that slower and steadier wins the race. I seem to be a much better sort of medium to longer term investor than the shorter term stuff at the moment, but I'm just building up those skills still as a shorter term trader, and it's much better. Again, my portfolio's up decently on the short term stuff as well. So the short answer is yes. And how much time is required to keep up with studies? You want to allow between roughly 7 to 10 hours per week to devote to doing the course. Here's what I'll do. Everyone, you can go and watch this. I'll pop this in right now. Yes, I'm going to pop this in the chat right now. / This is a little video that is on the masteringthemarkets.com website, which I made myself. I didn't do all the graphics, but I did a walkthrough of the courses and how I outlined the courses, and I give you a student experience walkthrough. Let me pop that in, walkthrough. So I'm going to pop that in right now. HTTPS. Sorry. I'm going to pop that in right now. HTTPS bit.ly mastering the MTM course walkthrough. All right. See that? If everyone goes to https bit.ly/MTM course walkthrough, watch that video. You'll hear my voice. I'm walking you through the couple of different courses and a student experience tour, and explains how much time you need to devote, how it's all outlined, how it's all structured, etc. So just watch that. But yeah, you should totally do a course. And then send me an email, joe.main@masteringthemarkets, to find out more, and I'll tell you the prices and all that. It's really cheap, actually, compared to what you get. Good morning, all, says Sino. Late to the party again. No problem. Thanks, Joe. Great show, but you got to go. See you on Friday on the Silver Investor Club private live stream. Thank you, Matthew. Art Wolf Stacker GMS. Okay, I think we're there. Cool. I'm going to go now because I don't have any other further comments. And it seems like they're sort of pulling away, unless there's any final chart requests. But I'm at the 1 hour mark. I've got to do my stuff for the day. No, we've stopped for the day. We've talked about Perth Bullion Exchange, perthbullion.com.au. I've talked to you about mastering the markets. And again, watch this video. It's really great. Walks you through the courses, and then you can send me an email, and then I will onboard you. April intake, there are 7 or 8 spots left for the April intake. Then there's the July intake. So if you want to start as soon as humanly possible, you want to email me now, basically, and check out all that info. Or you're happy to wait for a few months. I don't know if you should wait for a few months, depending, because the way the world's going. But if you want to get a learning and actually learn how to be a good investor, you need to go to school for it. Do you want to be good at something? You probably got to get educated, right? You can be self-educated to a point, but with technical analysis, you really got to get yourself properly educated. KCN, if you like. Okay, this is the last one. You bastard. KCN. In the last few minutes. Oh yeah, Kingsgate. I think I was in Kingsgate for a little bit. Oh yeah, okay. Kingsgate. Yeah, I was in this for a little bit, I think. So here is Kingsgate Consolidated Limited, mining stock. What does it do? Engages in exploration, development, and mining of gold. So it's a mining stock. Cool. On the monthly time frame. Yeah, from that high, yes, we did this. So check this out, right? This was perfect. Where are we? That 5-wave impulse. From this high and this low on the linear scale, it found resistance perfectly at the top end of the zag zone. Isn't that amazing how technical analysis works? Why would it? Why should it? It just does. So from here and here, top end there. Right, so now you found support at the bottom end. That's good. It needs to, and you did a double top as well. So yeah, I wouldn't say yet. Yeah, you're not out of the woods just yet. So you've now had a confirmed double top on the daily time frame because you've had an equal high. I guarantee you 100%. When you see this equal high, you're going to have a lower high on the relative strength index. Oh yeah, I didn't remember this. I just knew this was coming. So lower high in the relative strength index, then you've broken there. So that's a confirmed double top, which now means you are correcting, and nothing's saying yet that we are breaking onwards and upwards. So now I need to do this. So we're going to take it from the low, because now you are retracing this move here. Probably this you are retracing at the moment. And let me get rid of that for the moment. And now you're in its zag zone. So anywhere in here is the zag zone. You can call it the best buy zone. You can call it the expected support range, whatever you want. I would really be looking for. Yep, there we go. There she is. Cool. So look at this. Support right in there. Yeah, see that? So right in that area generally there is at the bottom end of the zag zone. So you're looking at around about $3.50. Watch it come potentially down into there. I would say that if you start bouncing below $3.50, I would be concerned. So if you start getting into here and then you do that, that's not good. You're heading down further. But if you get into this $3.50 zone, well, then what you're looking for is a bullish change of market structure, okay? So you're looking for this. So come down into here. I don't know. Pick a friggin' point, right? Down into that kind of thing. Then if you get that, once you get that bouncing off here, a bullish change of market structure, a higher low than a higher high on the weekly time frame, preferably. You could go down to the daily and see if it changes there. That would be the time to really consider getting in. Can't say no confidence whatsoever that we're done with the consolidation. So watch out for down into there. You could also do it on the similar thing. You could do it on the daily. If you do that and then that kind of thing, sure, that's great. Then I'd take a position. You'd get in here, put a stop loss here, and then you'd be potentially looking all right. And then you can just manage it. And then I'd be managing it until you got at least back out of around. Probably around about your $5, $6 kind of mark. You'd have to be managing it actively until you got through there. That's DVP. That's my final one. Now I'm getting out of here. Ladies and gentlemen, you have watched Good Morning Stackers with me, Joe Main. I go live on Tuesdays. I go live on Thursdays, and I do all my stuff in between. Welcome to the brand new subscribers, 35 new subscribers since my video from yesterday, which has done quite well. Send me an email, joe.main@masteringthemarkets, if you want to find out about one of their courses. I guarantee you it will be one of the best financial decisions that you have ever made in your life. It's certainly been for me. I've learned how to do stuff the right way, and my portfolio is looking great. Cool. Let's do the final synchronized slurp. Then we also dance this sucker out, because you have watched.
Good morning, Stack. Oh yeah, we're feeling fine. Good morning, Stack. It's podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do the
Synchronized slurp. Now we're on the move.
3, 2, 1, go.
Good morning, Stack. Oh yeah, we're
Extra slurpy for an extra great show. Love your work, people. Yabba dabba do indeed. I agree. Stay safe, stay informed, keep stacking whatever you're stacking. I'll see you soon.